Hello, YouTube. The bulls have finally flexed after 4 back-to-back red days on the S&P 500, and now we're starting to look like we want to curl back up and maybe just do it, go higher. So as we're set to go higher, if it continues to happen, we're going to look at some charts in a moment. But how high could we go? We're looking at gaps here at about 386, 389, and as high as about 396. To keep it really simple today, we're going to zoom out to a weekly time frame, and we're going to try to actually keep in mind one simple pattern because this seems really, really simple. What we're looking for is going to be a failed weekly breakdown. Last week's low is currently here at about 381.04. So if it is not 2008, meaning we're going to go for 4 red weeks or a nasty, dirty water slide starting right now. Whatever we saw, it's going to turn into a precipitous drop. If the 3 back-to-back red weekly candles does not lead to a decline like we saw in March, it's usually where we're going to find at least some short-term relief. Like every time we go down by 3 red, 1 green, 1, 2, 3 red, 1 green. It's called the odds. You might have to wait all the way until Friday for this to materialize. And as we noted, we're looking at PCE going into Friday as a potential catalyst. As we're getting started, I'm going to ask you for a favor, please, and thank you. If you could, smash that thumbs up. And as a reminder, we still have our 14-day free trial or our Santa special if you want to come trade with me, Justin from YouTube. All right, I'm trying things a little bit different today because I'm asking myself if I was in the shoes or if I was the one watching the video right now, how can we make things even easier? Because it has been a tough year. And what I'm actually going to do is have a dedicated board on here on TradingView just for YouTube videos. And what I'm going to do is start with a weekly chart, and then we're going to look down to the daily pattern, and I'm going to show you what is formulating because I think that a lot of people want to see what we think on the weekend, but then they want those updates during the week. And oftentimes there's not really all that much to say. But even by me doing this practice, I learned something. And now I'm going to show you exactly what that is. And here we go. So I said, if we're not going to get, if we have 3 red weeks, unless it's 2008 or March of 2022, which was the start of the bear market, what are we likely set for? Well, 1, 2, 3 red, 1 green, 1, 2, 3 red, 1 green, 1, 2, 3 red. Well, that also implies we're going to close this week out red. So if we're not able to get this weekly failed breakdown, meaning actually a daily close over 381.04, I don't know how we're going to reverse. We got to close out the third week red. And then maybe we get that Santa rally or a sugar rally going into the end of the year. Remembering that next Friday is a close of the weekly, the monthly, and the annual. December 30th is going to align perfectly for all three of those charts. So that is the blockbuster day. All right, anyways. So if it's not 2008 and, well, we're seeing some signs of flattening out. We can flatten out and be a bear flag before we go lower. We can flatten out and go sideways for longer. Or we can flatten out and then go back up or change the trend. So we're going to look at a heat map in a few moments to try to give you a different visual on what is actually happening. But let's just drill down here for a moment to understand. All right, so we have a green line, we have a red line, and a red downtrend. This is what I'm going to have on every chart, including QQQ, DXY, VIX, and a few others. And the reason why is because for me, it all starts with the weekly chart. But since we're doing daily videos, we're going to start with the weekly to try to give you a visual of, oh, okay, the dominant trend is down. I don't have to explain that anymore. Also, red means resistance, white means important, green means support. So now let's have a look here at our daily chart to see what it looks like. And as we're doing that, I'm going to ask one final time, please, and thank you. If you could please smash that thumbs up. Thank you so much. All right, so now, this is actually pretty insightful here, Justin, because when I look here, okay, well, red, yeah, that's where the resistance came from. So red, yeah, we hit it, come right down to the white line, gap below, and now we're trying to carve out that bottom around the green weekly line, which means how are we going to go back up or, again, potentially go to 390s, 400s, maybe even higher if we can't even bounce off 380, 380.54 to be precise? I don't know. And now with the market on close, boom, to the cent, 380.54. It's like magic. So now if we look here, well, it's not just the S&P that's a problem here. It's also QQQ. So what I'm failing to see is a thrust of volume on a single day where we have capitulation or an exodus out. This has been a very well telegraphed bear market or recession, whatever you want to call it. Everyone's aware of where we're going. So what do we don't already know? Well, looking here at the weekly chart for S&P, maybe we got to put in a third red one. Maybe we're not going to get that rally into the end of this week. Maybe it's next week. And why would that matter? Well, annual performance. You report your I think it's called your I forget right now actually. Something Q, your 8Q, or I forget. Someone will comment and tell me what it is. The annual filing for stock brokerages where we know what they bought and sold. So next Friday is when we're going to hear about all those filings, and that's when bonuses are determined. You find out what your year to date performance was against the S&P. So for S&P, well, it's like we just got to go up by about 50 cents more. Yes, we got a green one. If we're due for another one, we need to see it either tomorrow or on Thursday. Otherwise, we're probably going to close the week out red. Looking here to QQQ, same thing. What do we have? We have a red line, we got a green line, and we got some white lines. So this one here, dominant red pattern, it's lower. We got a green line going back here to June. And just an FYI too, the green line, you're going to note where it starts, which means a horizontal ray. I'm saying it's not just a green line. It comes from right here. It comes from the June low, and the number should be the green number. White's going to be white. Red, you guessed it, it's going to be red. So 296 here in this case is 296, and that's what we're noticing here. All right. So if we now have a look here at QQQ, what is happening? Well, this is just a breakdown. It's not a weekly failed breakdown. S&P has been flirting with that area, not QQQ. We have to make it back above 270, 261, that number over here on the right-hand side, and we just can't do it. So looking here on a daily, well, it can't even touch it today, and it's soft. So we sold off hard. We're trying to go sideways, but it's not looking all that strong. If I look over here back to S&P, well, at least it's been poking over it. And if you look at a shorter time frame, like a 1 hour chart, it's actually what? Well, it's actually bouncing around, right? A little bit above, a little bit below, right back here. That's really interesting. One more chart I'll show you here, just because this is important for me. When we let me see if there's important lines. I don't think they are. Let's just delete them. What's important here is ES, or the E-mini futures. And what I've been talking about is that not just the price, but the volume is telling me a story here. We see lower wicks, bought up once, bought up twice, but sold it off right here at 38.60, 38.70, right around that 50 DMA. So what's happening here? Well, for me, we got biggest bar is green. That goes back to Friday. Then we got Monday. Now we got Tuesday, which means buyers are currently accumulating. Are we going to reverse? Well, I don't know, right? This could turn into an inverse head and shoulders, but we have to overshoot to land in here. Otherwise, we need to grind back up, higher low, higher high, higher low, higher low, higher high, higher high. We have to start grinding. I'm not sure, but this right here in the volume is telling me a pretty strong signal. I'm watching that really close. So in terms of the S&P and tomorrow and how high we can go, well, we have to make it back above that key pivot. We have to make it back above 381, but the S&P is multiple stocks. So what we want to talk about today is going to be not just that we're watching the S&P 500, but we have to understand what underlies it, meaning the stocks inside of it, because a lot of us have recency bias where we only really focus on tech because it's just worked so well. Well, inflation's new in our lifetime. So is a rotation to old economy or commodities and stuff. And tomorrow or the next day, we're red. We're going to talk about the year of the bear. Might even save it for the weekend deep dive, because I think that yearly charts are very humbling when you look at them. But anyways, let's finish off the story because we don't want these to be super long videos. Hopefully you guys enjoy the new format. Please drop me a comment and tell me what you think. I'm trying to think about you, the viewer, and trying to just make sure you guys have the most value out of these videos. So looking here at QQQ, what I'm noting is that when we go to a hollow candle, well, green bar, meaning we closed lower than we opened, but that's the exhaustion gap higher. 1, 2, 3, 4, 5 red. We're due for a green one. Is it going to hold? Is it going to be a soft one like SPY? I don't know. But closing up 50 cents on a $300 stock is not all that impressive. And here's the problem. Part of it is Tesla. I'm sure everyone's already aware of it. Not going to talk about it. You guys know what's going on there. I actually want to look at a different chart called ARC. And the reason why is because, oh my goodness, it made a fresh 5-year low. That is right. 5 big ones, 5 bananas, 5 years. Remember, the S&P returns an average of 10% per year. Warren Buffett is now trouncing Kathy. And this is not a knock on Kathy. This is just if we understand that in a new regime of higher inflation, growth stocks are going to have a hard time. It's very obvious by looking at this chart. We are not at areas we've been at since 2017. Woof! right? That is painful. That is not nice. So if ARK is having such a hard time, and we're just battling for our 2020 low, and we just made a fresh low versus 2022, and the market's been going up since October. Well, fizzle, right? The October rally did not happen on ARK. Fizzle, new low. Why? Well, because there's no relief. There's no for growth stocks. There's no relief if inflation is going high. Sorry, if interest rates are going higher, and that's what's happening here. Probably going to go sideways. That's the new up for ARK. Sideways is the new up. Down is the same down. So when we look back to the Nasdaq or just QQQ, for me, it's like very obvious. Like, well, yeah, it's a weekly breakdown, not a failed breakdown, because man, there's like so much drag, and Tesla's just on a complete waterfall right now. So at a very high level, that's the story for me. But the S&P is a lot of stocks. We'll look here to the Dow. Wow, there's a weekly failed breakdown. There's a pattern I can get behind. Why? It took out last week's low at 326.45 and then recouped it. And it's closed 2 days above the 50 weekly again. Man, that's strong. Yep. And it's actually a lot closer to its all-time high. And again, red is resistance, white is support, white is important, green is support. And you can see where the horizontal race starts to see why I'm choosing that area. I'm using the lows and the high going back to May of 2021. Okay, so we spent a lot of times looking at charts, but what else can we do? Well, the other thing we can do is have a look here at the heat map, because this is going to tell you a very clear story if we go from 1 day all the way up to the 1 year. And the reason I'm talking about this is because I'm personally planning my portfolio for 2023. And if you want to join us, I'm going to go through that on Wednesday with a private education in our group. Again, 14-day free trial if you want to come test it out and trade with me, Justin from YouTube. But anyways, I'll stop talking about that. So what I'm looking at here is I'm trying to understand what the market's doing. In the last 1 day, pretty flat, other than Tesla. Woof, that's red, 8%. Oof, man, it's accelerating there. Whoa. Tesla doesn't look so special when we look at the 1 week. It's red everywhere. Yep, it's an uphill battle. And what's leading? Well, chips are leading tech. Tech is leading SPY. Okay, cool. Let's go higher. 1 month. Okay, healthcare is doing okay. Consumer non-durables. Otherwise, man, it's pretty red still. Whoop. Okay, let's zoom out more. Getting greener, but what's lacking here? Well, tech, right? Tech is still red. A lot of other pockets are green. Utility is red. Tesla red. Otherwise, it's looking a lot better. Now let's look at 6 months. Mostly the same here. Nothing's really happened between the 3 and 6 month. Now at the year to date, okay, well, we see some clear winners and lots of losers, right? Energy, healthcare, right? Health over here as well. All right. Is there a clear trend though? Make it even simpler for me, Justin. Let's go no group. And now let's go to 1 day. Just look at the blocks over here, the biggest ones, Apple to Amazon. All right, 1 week, bloody. We go to 1 month. Oh, that's the theme. Yeah, it's the last soldiers are starting to fall. That's the sign that we're going lower. 3 month. Yeah, well, the theme is these are red, and a lot of disparity here in terms of green. Lots of smaller blocks are green. Visa, Nvidia, Berkshire, but not the biggest ones. The ones that give it the most weighting. So looking here at 6 months, all red still. It's team red. Yep, it's team red year to date. Woof, right? All team red here. Berkshire, United, Johnson & Johnson, Exxon, all looking good, but not enough. Whoa, right? That's a pretty clear theme to me. And yes, that's the theme to me. So I'm trying to think about what I can do in terms of just looking at charts, but also trying to tell a bit of a story. So what I really want to do is start off with a few charts every day, just the ones that really matter, and then try to give some supporting evidence by looking at others. So we're going to look at S&P every day, start with the 1 week, then drill down to the 1 day. We're also going to have a look at QQQ, just because that's what I care about. These videos are what I think is important, and I'll tell you what I think is important. SPY, QQQ, DXY, and then we're looking at VIX. For me, those 4 things give me enough data. Lately, we've been having to look at the 2-year note and the 10-year note just because the bond market's definitely not the calm, cool market it's been before. So that's really what I want to focus on going forward. And I'd be really, really, really appreciative if you could just drop me a comment and tell me what you think about that. Otherwise, this is what I thought the story was for today. Let's look at the colors instead of looking at charts, which confuse people. And then for the rest of the week here, Bank of Japan had a huge move today. I'm not going to talk about that just because we can talk about it later. I mentioned it in a private group this morning. I believe, again, not I know, I believe that Japan is now the last of the G7 countries, the group of 7 or the 7 most important countries to basically get out of easy monetary policy, which means they've been at this for about 10 years or something like that, like about 10 years. So We've been at it for about 2. They've been at it for about 10, which means they were first one in, and they're also the last one out. So out of the group of 7, Europe has now moved. The Fed has moved. Japan is now joining, which means easy money is a thing of the past. They are confirming inflation is going to get sticky, and monetary policy is likely going to remain restrictive. So what does that mean? It's a road ahead for stocks. Bonds are likely going to do just fine. So that's what happened overnight. It's why we saw the shakeup. It's why we saw Bitcoin and everything move. And the video's getting a little bit longer, but if we look at the Bitcoin chart here, do we even notice that it's up on the day? Nope. It's up 2.5 and Ether's up 4, but when I zoom out here, I'm like, I don't even see it on the chart. Does it matter? Nope. It's better than ARK, but it's not looking sexy. Over here with Ether, not all that much better. I barely even noticed up 2.5 on the week. It's soft. So this is helpful for me too, because then I'm like, oh, well, we're kind of stuck here. Why do we even look at it? Why do we care? We're range bound. Yep, we're range bound. Doesn't matter. I'm trying to finish the story off though. So for the rest of the week, we got some data out tomorrow, 8:30, 10 a.m. We'll see what happens. I don't know. If we're going to get a move higher, maybe consumer confidence going higher is going to be the thing. I don't know. Watching inflation out of Canada too. Then we got a GDP revision coming out on Thursday, and then that core PCE coming out on Friday. That's still the one that I think could be a catalyst. But I also thought that we would be higher by Wednesday, which means I thought we would be at least above last week's low. So far, that's not transpiring. So I'm not sure if I'm wrong. I'm not sure if the low liquidity and people just being away from their desks is playing into role here, or if the Bank of Japan is now going to start a waterfall for more stocks lower. As we're wrapping up here, I'm going to ask you for one final thing. If you want to go to our community tab and you want to tell me what skills you're trying to learn or level up in the stock market, I will make an effort to include those as an educational portion in the daily videos. Why? I'm trying to add the most value as possible. And we don't have to wait for January 1st to start making New Year's resolutions. I want to get better every day. I think I've been really upping my YouTube game lately over the last couple of years. And now I'm excited for this next chapter. So please make sure to drop me a comment and tell me what you think. And if you want to see what I'm planning to trade for this next year in my portfolio, again, I'll remind you one more time, thealgo.com to trade with me. And if you want to come test us out, see what we're doing, and then you want to leave, no hard feelings. Test us out for 14 days, and then just drop off after that. Thank you so much for tuning in, and I look forward to seeing you tomorrow. Thanks so much.